Listen, if you're watching this right now, something inside you is hurting. Maybe it's the account that's bleeding again. Maybe it's the nights you can't sleep because you keep replaying that one trade you should have skipped. Or maybe, and this one cuts deepest, it's the quiet fear that maybe you're just not cut out for this. That trading is for the lucky ones, the connected ones, the people who somehow always catch the big move while you're left holding the bag. I want you to hear me clearly from the very first second. Success in trading doesn't come by chance. It never has. It never will. I've sat where you're sitting. I've stared at red screens until my eyes burned. I've had people tell me, just wait for your luck to turn. And every time someone said that, a little piece of me died inside because I knew the truth. They were too scared to face. There is no luck coming to save you. What looks like luck to the outside world is almost always the result of thousands of hours most people never see. The early mornings when no one's watching, the weekends spent reviewing losing trades instead of partying, the moments you wanted to quit but forced yourself to journal one more page, study one more chart, sit through one more losing streak without revenge trading. That's not chance. That's choice stacked on choice until the compound effect looks like magic to everyone else. Let me take you back to a moment that changed everything for me. It was 2014. I had just blown my third account in under 18 months. Not small blows, full wipes. I was working a dead-end job during the day, trading at night, telling my wife, this time it's different. She believed in me longer than anyone should have. But after that third wipe, she looked at me with tears and said something I'll never forget. Baby, I believe you can do this, but are you sure you're doing the things that actually make it happen? That question hit like a brick, because deep down, I knew the answer was no. I wasn't doing the work. I was chasing, jumping on every hot tip from forums, copying signals from Telegram groups, buying into the idea that if I just found the right mentor, the right indicator, the right setup, the money would rain. I treated trading like a lottery ticket. Scratch, hope, repeat in the market. It treated me exactly how it treats gamblers. It took everything and gave nothing back. But that night, after she went to bed, I sat in the dark and made a promise to myself. No more excuses. No more waiting for luck. If I was going to make it, I had to become someone completely different. Someone who didn't need the market to be nice to him. Someone who could survive anything it threw. That promise started the real journey. And the first truth I had to swallow, the one that hurts the most but sets you free, is this. The market doesn't owe you anything. It doesn't care about your bills, your dreams, or how hard you've tried. It only rewards those who show up prepared every single day, regardless of how they feel. Most traders never accept that. They spend years blaming the news, the whales, the algorithm, bad timing, manipulation. But the second you stop pointing fingers outward and start pointing them inward, something magical happens. You gain power, real power, because if the problem is outside you, you're helpless. But if the problem is inside you, then the solution's inside you too. I want you to pause this video right now. Seriously, pause it. Look at your last 10 trades, not just the winners, all of them. Ask yourself honestly, did I follow a written rule? Or did I feel excited and jump in? Did I size properly? Or did I revenge size after a loss? Did I wait for my exact setup? Or did I move my rules because this one feels different? Be brutal with yourself. No sugarcoating. Write it down if you have to. Most of you will see the same pattern I saw back then. The losses came from impulse. The wins came from when you accidentally followed a rule. That's not chance. That's evidence. Evidence that the game isn't random. You're the variable that's random. And the beautiful, terrifying truth is you can change that variable. You don't need more indicators. You don't need a bigger account. You don't need the next holy grail strategy blowing up on TikTok. You need to stop treating trading like entertainment and start treating it like a craft. Think about any master you've ever admired, a musician, a fighter, a chef. Did they get great by chance? No. They obsessed over fundamentals. They drilled basics. until their hands bled. They studied their failures like scientists. They showed up when they didn't feel like it. Trading is no different. But here's where most people quit before they even start. They think craft means complicated. It doesn't. Simple rules, followed ruthlessly, beat fancy rules, followed loosely every single time. I used to think success meant finding the perfect entry trigger. Now I know it means finding the perfect self. The man who can sit on his hands when the market is screaming at him to act. The woman who can cut a loser at -1%, even when every cell in her body wants the hope. The person who reviews their week like a detective instead of like a victim. That person doesn't need luck. They create their own probability edge through behavior. Let me share one more story before we go deeper. There was a kid in one of my early mentorship groups. Let's call him Kofi. Bright, hungry, from Accra, just like a lot of you watching right now. He messaged me every week with screenshots of blown accounts. Always the same story. I was up 8%, then news came out. I held, it reversed. I panicked. I asked him one question that changed everything for him. Kofi, if you knew 100% certainty that this trade was going to zero tomorrow, would you still hold it? He said no. Then why are you holding it now? Silence. Because deep down, he was still hoping for a miracle, still believing somewhere a lucky reversal would save him. I told him, stop praying for miracles. Start building systems so strong that miracles aren't necessary. He took that to heart. Started with one rule only. I will never hold a loser past my predefined stop, no matter what. Nothing else at first. Just that. 6 months later, he was profitable. Not rich profitable. Consistent. Calm. He had killed the gambler inside. That's what we're doing here. Over these next parts, I'm going to walk you through the layers most traders never reach because they get stuck chasing setups instead of chasing character. We're going deeper into the mind next because strategy without the right psychology is just expensive entertainment. But before we move on, I need you to make the same promise I made in 2014. Say it out loud. If you're alone, I will no longer wait for luck. I will build myself into someone who doesn't need it. Feel that weight? That's responsibility. And responsibility is freedom in disguise. You've already taken the first real step by facing the truth that luck isn't coming to rescue anyone. You've looked inward instead of outward. You've named the problem. Now the next layer reveals itself naturally. Once you stop waiting for miracles from the market, you realize the biggest miracles come from inside your own head. The market doesn't beat traders. An untrained, unchecked mind beats traders. And right now, there's a war going on here. Fear on one side, greed on the other, doubt whispering from the shadows, hope pretending to be your friend. These aren't random feelings that come and go. They're patterns that repeat until you interrupt them. I've lived every version of this war. There were mornings I woke up already anxious, checking my phone before my eyes were fully open, heart racing because yesterday's loss was still sitting heavy in my chest. I'd tell myself, today is different. But 5 minutes into the session, the same impulses would take over. I'd see a setup that looked perfect, feel that rush, convince myself this time I deserved the win, and then watch it all unravel exactly like before. The turning point wasn't finding a better entry model. It was realizing I had to fight my own mind before I could ever fight price action. Let's look at how these enemies actually show up one by one so you can start spotting them in real time. First comes fear, the quiet one that ruins more accounts than greed ever will. Fear of losing makes you cut winners too soon. You see plus 20 pips and suddenly your brain screams, take it before it vanishes. So you exit, only to watch it run another 80 pips without you. Then the next trade goes against you 15 pips, and because you're already bruised, you give it room you would never give on a fresh day. Maybe it'll come back. It rarely does. Fear of missing out, FOMO, is the flip side. The chat is buzzing. The chart is moving fast. Everyone seems to be in, and you feel stupid sitting out. So you chase. You enter late at the worst possible price and get stopped out on the pullback while the early birds take profit. Both fears come from the same broken place, lack of trust in yourself. You don't trust that good setups will come again. You don't trust that following your rule will pay off over time. You don't trust that small, consistent wins are better than hoping for one massive home run. The only way to rebuild that trust is through repetition of small, correct actions, even when they feel boring or unrewarding. If your normal position size feels scary right now, cut it in half or in quarters. Trade micro until your nervous system calms down. The goal isn't to get rich in the next month. The goal is to prove to yourself over and over that when you say you're going to do something, cut at your stop, take partials at target, skip the marginal setup, you actually do it. Each time you keep that promise to yourself, fear loses a little power. After enough proof, the voice gets quieter. You start to feel calm even when price is dancing around your entry. That's when real edge appears, not from the setup itself, but from the fact that you can actually sit in it without self-sabotage. Now let's talk about greed, because it's louder and more seductive. Greed doesn't just push you to over leverage. It convinces you that this time the move will go twice as far as usual. It turns a solid plus 2% day into a break even because you waited for plus 5%. It turns a good week into a flat month because you kept pushing when you should have banked and walked away. Greed feeds on scarcity thinking. If I don't take more now, I'll never get another chance like this. The medicine for that poison is gratitude. Simple, daily, deliberate gratitude. Before you turn on your charts each morning, write down 3 things you're thankful for in your trading life. Not vague things, specific ones. I'm thankful I woke up with enough capital left to trade today. I'm thankful that last loss taught me not to move my stop again. I'm thankful I have eyes to see these charts and a mind to learn from them. Do it even when you don't feel like it, especially when you don't feel like it. Gratitude shifts your lens. Instead of focusing on the money you haven't made yet, you focus on the opportunity still in front of you. Greed hates that shift. It can't survive in a mind that's already content. When you're content, you take your plus 1.8% and close the platform. You don't force the next trade. And strangely, when you stop forcing, the bigger days start showing up more often. Not because the market changed, because you changed. Then there's doubt, the one that creeps in slowly and erodes everything. Doubt says, what if your rules are flawed? What if that Twitter trader with 100K followers knows something you don't? What if you're just stubborn and wrong? Doubt makes you second guess mid-trade. You move your stop wider just in case. You add to a loser because the structure still looks good. You switch time frames looking for confirmation that supports staying in. The only thing stronger than doubt is evidence. So build evidence. Keep a journal, not fancy, just honest. For every trade, write why you entered in plain words, where your stop and target were supposed to be, where you actually exited, and why. One sentence on what you did correctly. One sentence on what you'll do better next time. Don't judge yourself in the moment. Just record. Then once a week, sit down and look at the numbers coldly. If your A+ setups win 65% over 40 trades, doubt has nothing to say. If they're losing, the data tells you where to adjust without emotion, without panic. Data kills doubt faster than any motivational quote ever could. And finally, hope, the sneakiest one of all. Hope keeps you in losers long after your stop should have triggered. Hope makes you ignore the break of structure because maybe this is the fake out. Hope feels noble, like perseverance. But in trading, hope is usually just fear dressed up as optimism. You kill hope by replacing it with definition. Before you enter any trade, write down exactly what would prove you wrong. Not vague feelings, clear, measurable conditions. If price closes below the low of the setup candle, I'm wrong. If we reach 4 p.m. New York time without momentum in my direction, I'm wrong. If it touches my stop, I'm wrong, no exceptions. When that condition hits, you exit. No debate, no extra candle, no let's see what happens. I once taped a note to the top of my monitor. Hope is not a strategy. I read it out loud every time I felt the urge to hold through pain. It felt ridiculous at first. Then it became sacred. That one sentence saved me more money than any indicator ever did. These battles, fear, greed, doubt, hope, don't disappear completely. They just get weaker as you get stronger. You strengthen yourself the same way any skill grows: reps, reflection, recovery. Trade small until calm feels normal. Journal ruthlessly. Rest when you're emotionally spent. Forced trading on tilt is just donating money. Surround yourself with reminders of why discipline matters. A photo of your family, a note with your biggest why, a screenshot of your first small winning week. Over time, the war quiets down, not because the enemies leave, but because you become the general who knows how to keep them in line. And when your mind is no longer the biggest obstacle, something beautiful happens. You finally have space to build something solid outside yourself. A plan, not a complicated 50-page document. A simple personal roadmap you actually follow, one that turns all this inner work into consistent decisions. That's where we're headed next. Because mindset without structure is just temporary motivation. Mindset with structure becomes unbreakable consistency. Once your mind starts to settle, not gone quiet forever, just no longer the loudest voice in the room, you finally have enough space to build something that lasts, something outside of fleeting emotions, something you can touch, follow, and trust, even on the days when everything inside you wants to rebel. That something is your plan, not a 40-page trading Bible full of arrows, colors, and rules nobody can remember. Not some copied strategy from a guru who never shows their losing months. Just a simple personal roadmap that fits you, the one that answers the only questions that really matter when price is moving and your pulse is racing. When do I get in? When do I get out? How much do I risk? What do I do when it's going wrong? When do I stop for the day? If you can't answer those 5 questions clearly before you click buy or sell, you're not trading, you're gambling with extra steps. I spent years pretending I had a plan when what I really had was a collection of feelings disguised as logic. This looks good. It feels strong. The news is coming. Better get in early. Those aren't plans. Those are reactions. And reactions are what keep most traders trapped in the same cycle year after year. The moment I wrote my first real plan on a single sheet of paper, nothing fancy, it felt like putting guardrails on a mountain road I'd been driving blind. Suddenly I could see where the cliffs were. I didn't have to guess in the fog. I just followed the lines I'd drawn myself. Let's build yours the same way. Simple, honest, unbreakable. Start with your why, not the surface why, like I want to make money. Dig deeper. Why does trading matter to you? Write it raw. For me, it was, I want to give my family the kind of security I never had growing up. I want to be home for dinner instead of stuck in traffic after a soul-crushing job. I want to prove to that scared kid inside me that he didn't have to settle. Your why becomes your anchor. When the day gets ugly and you want to revenge trade or force a setup, you look at that why and ask, does this action move me closer to it or farther away? Most times, the answer stops you cold. Next, define your edge. What exactly gives you a mathematical reason to believe you'll make more on winners than you lose on losers over hundreds of trades? It doesn't have to be complicated. It can be as straightforward as, I only trade when price reaches a key level I've marked in advance, shows rejection with a strong candle close, and volume picks up in my direction. Or, I wait for a pullback to the 50% level of the previous strong move during London Open with confluence from higher time frame structure. Whatever it is, write it in plain words anyone could understand. No secret sauce needed, just clarity you can defend even when you're losing. Then set your non-negotiable rules. These are the lines you never cross, no matter how tempting the setup looks. Examples that saved me: never risk more than 1% of my account on any single trade. Never move my stop farther away once the trade is live. Never add to a loser unless it's part of a written scaling plan I've tested. No trading after 2 consecutive losses in a day. Walk away. No trading during major news if it's outside my tested edge. Journal every trade before I shut down, win or lose. These aren't suggestions, they're laws. Break them and the whole system collapses. Now the part most people skip. Define your session rhythm. When do you trade? Not whenever the market moves. Pick your window and stick to it. For me, it was New York, open to London, close, overlap times when I was sharpest and liquidity was highest. Outside those hours, charts off. No peeking, no just checking. Decide your max daily loss. Mine was 3% total for the day. Hit it, done. No exceptions. That rule alone prevented small drawdowns from turning into account killers. Decide your weekly review rhythm. Sunday evenings became sacred for me. I'd pull up the week's trades, look at screenshots, read my journal notes, and ask 3 questions. Did I follow my plan? Yes. No percentage. Where did emotion override rule? What one thing can I improve next week? No self-flagellation, just facts and one small adjustment. This rhythm turns trading from chaos into a craft. You stop reacting to the market and start executing a process. And here's the secret most traders miss. Your plan doesn't have to be perfect from day one. It just has to be followed perfectly from day one. Start simple. Maybe your first version is only 3 rules long. That's fine. Master those 3. Then add a 4th, then a 5th. Compound the discipline the same way you compound capital. Slow, steady, no shortcuts. I remember when my plan was laughably basic. Only trade London Open reversals at daily highs, lows, risk 0.5%, cut at 1R, take partial at plus 1R, trail the rest. Nothing else. I followed it religiously for 3 months. Lost money some weeks, made money others, but the account never blew up. And slowly, the consistency built, confidence built. Then I could layer in more nuance without everything falling apart. That's how real progress happens, not by adding complexity first, but by adding obedience first. Your plan is your mirror. When you look at it, you should see the version of yourself you're becoming. Calm, disciplined, patient, reliable. If following it feels uncomfortable at first, good. That means it's working. Comfortable trading is usually reckless trading. Write it down today. 1 page, bullet points. Put it where you can see it every session next to your monitor, taped to the wall, saved as your desktop background. Read it out loud before you trade. Not as ritual, but as a reminder. This is who I am now. This is how I behave. Over time, the plan stops feeling like a list of restrictions. It starts feeling like freedom. Because when you know exactly what to do and what not to do, decision fatigue disappears. Doubt shrinks. You trade from clarity instead of confusion. And clarity is where real edge lives. With your roadmap in place, the next truth becomes impossible to ignore. Even the best plan in the world can't survive if you don't protect what you've built. Money management isn't sexy. It doesn't make highlight reels, but it is the difference between surviving long enough to win and disappearing in a single bad month. That's where we're headed now. Learning to guard your capital like it's the only thing standing between you and the life you're chasing. Because one bad trade doesn't have to end the story. Not if you treat every dollar like it has a job to do. Once your roadmap is in place, not perfect, just clear and written, you start to notice something shift. Decisions that used to feel heavy and emotional now feel almost automatic. The chart moves, your rules either match or they don't. If they match, you act. If they don't, you sit. No drama, no second guessing, no maybe this time. But even the cleanest plan in the world can't survive if one bad sequence wipes out months of careful work. That's where most traders fall apart, not because their edge disappeared, but because they never learned to protect what they had. Guarding your capital isn't glamorous. It doesn't get likes or retweets. Nobody posts screenshots of their 0.8% risk day. But this is the quiet skill that separates people who are still trading 5 years from now from those who vanished after one brutal drawdown. I learned this the hardest way possible. In 2016, I had finally strung together 3 green months in a row. My account was up 42%. I felt invincible. Then came a week where nothing worked. My setups failed, one after another. Instead of stepping back, I told myself, it's just variance. Keep going. I increased size to make it back faster. By Friday, I was down 38% from the peak. One more push, and I would have been back to square one. That night, I didn't sleep. I stared at the ceiling, realizing something terrifying. The market hadn't beaten me. I had handed it the knife. From that day forward, money management became non-negotiable. Not an afterthought. The foundation. Here's how to build that foundation. So, one bad day or even one bad month never ends your story. First rule, risk is sacred. Decide right now, before the next trade, the maximum percentage of your account you're willing to lose on any single idea. Write the number, say it out loud. Mine started at 1%, then I dropped it to 0.75% during rough periods. Some days I go as low as 0.25% if my mind isn't 100%. Why so small? Because trading is a game of survival first, profits second. If you risk 5% per trade and hit 4 losers in a row, which will happen, you're suddenly down 20%. Your psychology cracks. You start trading, scared or desperate. The edge you spent months building becomes irrelevant. Small risk keeps you calm. Calm keeps you following the plan. Following the plan keeps the edge alive. Second, define your daily and weekly circuit breakers. Daily max loss. I set mine at 2.53% total for the day. Doesn't matter if it's one trade or 5. Hit that number, platform closes, lights off, walk away. No one more to recover. That rule alone has saved me from turning negative 3% days into negative 15% disasters. Weekly max drawdown, mine is 8%. If I'm down 8% from the highest point that week, I stop trading until the next Monday. Full stop. It forces reflection instead of revenge. These aren't flexible guidelines. They're hard stops. Automate them if you can. Some platforms let you set equity alarms. If not, set phone reminders or tell a trusted person to check in. Third, position sizing must match conviction and account reality. Not every setup deserves the same size, but size should never be decided by emotion. Simple framework that works. A+ setups, all stars align, high confluence. Full allowed risk, for example, 1%. B setups, good, but missing one piece. Half risk, 0.5%. Anything less, no trade. Adjust based on account size too. When my account was small, $5K, $10K, I risked 0.5, 0.75% max. As it grew, I could afford slightly more without changing the emotional impact, but never chase percentage gains by jacking up risk. The goal is steady growth, not explosive spikes that end in explosions. Fourth, protect winners as fiercely as you cut losers. Most people focus only on stops for protection, but trailing or partial profit taking is equally important. I take partials early, usually at 1-to-1 or 1-to-1, 5, risk reward. Move the stop to break even on the rest. then trail using structure swing lows, highs, ATR multiples, whatever your plan defines. This way, even if the trade reverses, you bank something. Greed can't talk you into giving it all back. One habit that changed everything. I started treating every open profit like it already belonged to my family. Would I risk my kids' school fees on this candle staying green? That mental shift made me quicker to lock in gains. Fifth, diversify time and opportunity. Don't marry one pair or one setup. Spread your attention across a handful of instruments that behave differently. When one market is choppy, another might be trending. This smooths the ride and prevents you from forcing trades in dead conditions. Also, diversify emotionally. Don't let one losing streak define your week. If Monday and Tuesday are red, remind yourself Wednesday is a new sheet, fresh capital, fresh mind. Sixth, build a cash buffer outside trading. Keep living expenses separate. Never trade with rent money, emergency funds, or borrowed capital. The less pressure you feel to need wins, the less you'll force them. I keep 6 months of expenses in a boring savings account. Knowing it's there lets me trade like the account is play money, not life money. Paradoxically, that detachment makes me more disciplined. These aren't sexy rules. They're boring, repetitive, unflashy. That's why they work. Flashy traders disappear. Boring traders compound. Let me share one quick story that cemented this for me. A trader I mentored, let's call her Amma, started with $8,000. Talented, great eye for structure, but emotional sizing. She'd risk 6% when excited, blew the account twice in 6 months. We rebuilt her plan together, dropped risk to 0.5%, added daily max loss of 2%, forced partials at 1R. She hated it at first. How am I supposed to grow fast? 6 months later, her account was at $14,200. Not because she suddenly became a genius, because she stopped giving the market permission to erase her. Slow growth feels painful until you realize it's the only growth that lasts. With protection in place, losses stop feeling like failures. They become data points, controlled, expected, part of the process. And when you treat every loss as a teacher instead of a tragedy, something powerful opens up. The ability to learn without breaking. That's the next layer, turning scars into strength instead of letting them scar you shut, because the market will keep handing you lessons. The question is whether you'll finally start listening. Once you start treating every dollar like it has a mission, instead of just being fuel for the next gamble, losses change shape. They stop feeling like personal attacks. They become controlled experiments, small, measured, and survivable. The sting is still there, but it no longer knocks you out of the game for weeks or months. That shift alone is massive, because the market will keep delivering pain. It has to. No one gets the consistent profitability without eating a string of reds that make you question everything. The difference is in how you receive those lessons. Do you let them break you, or do you let them build you? Most traders let them break them. They hide the journal, avoid the screenshots, pretend the week didn't happen. They carry the loss like a backpack full of bricks. Every new trade feels heavier because the last one is still screaming in their head. The ones who last flip the script. They turn scars into strength. They study the wound until it teaches them exactly what not to do next time. They don't rush to cover it with a new trade. They sit with it, dissect it, extract the wisdom. Then, and only then, do they step back into the ring. Lighter, sharper, wiser. I've got a scar from 2019 that still reminds me every day. I was up 65% on the year, feeling untouchable. Then came a Friday afternoon setup that looked textbook clean, rejection at a weekly high, strong volume divergence, news catalyst fading. I loaded full size. Price moved in my favor, 40 pips. I took partials, moved, stopped, to break even. Then the weekend gap risk hit me in the face. Sunday night, open, a surprise headline reversed everything. Price gapped right through my stop and kept running. I woke up Monday to negative 14% overnight. No warning, no chance to adjust. I didn't revenge trade that day. I didn't even open the platform. I sat with the number, felt the anger, felt the embarrassment, felt the fear that maybe I wasn't as good as I thought. Then I did the only thing that actually helps. I reviewed it like it belonged to someone else. I asked the hard questions without letting emotion answer. Did I respect my weekend risk rule? No. I left the position open into a major news cycle I knew was volatile. Was the setup still valid after the partial? Yes. But I ignored the higher time frame warning signs because I was already in profit and greedy for more. Did I size correctly for the conditions? No full size on a Friday. Close was reckless given the gap potential. What one change prevents this forever? Never hold over the weekend unless it's a swing with defined hard stops and reduced size, period. That one review turned a negative 14% disaster into the single most valuable lesson of my career. I wrote a new rule. No weekend holds unless risk is cut to 0.3% max, and structure supports it clearly. I've followed it since. Never had another gap wipe like that. The key isn't avoiding pain. It's mining the pain for gold. Here's how to do it systematically. So every loss actually moves you forward instead of holding you back. First, create a loss ritual, something repeatable, almost ceremonial. Right after a trade hits your stop or you manually exit at a loss, close the platform immediately. No scrolling, no one more look. Step away for at least 10 minutes. Walk, breathe, drink water, break the emotional loop. When calm, open your journal and write the facts only. No judgment yet. Setup description, entry reason, exact words from your plan. Plan, stop, and target. Actual exit price and reason, profit and loss. Then ask the 4 magic questions. Did I follow my written plan from entry to exit? Yes, no, plus. Percentage adherence. Where did emotion override rule? Be specific. Moved stop because scared of missing continuation. What warning sign did I ignore? What one small change would have made this trade better or prevented it? End with one positive. What I did correctly today. Even if it's just I cut it at 1R instead of hoping. Do this for every loser. No exceptions. Over time, patterns jump out. You'll see the same mistakes repeating. Maybe it's always Friday afternoons, always when you're tired, always on marginal setups. Once you see the pattern, you can kill it. Second, categorize your losses. Not all losses are equal. Some are good losses. You followed the plan perfectly. The edge just didn't play out this time. Those are tuition. Celebrate them quietly. They prove your process is alive. Some are bad losses. You broke a rule. Those are the ones that hurt most, but teach most. Track them separately. If bad losses are more than 20% of your total, you're not losing to the market, you're losing to yourself. Third, review in batches. Daily journaling catches the details, but weekly and monthly reviews catch the bigger story. Every Sunday, pull the last 20-50 trades. Look at win rate, average R adherence percentage, chart your equity curve, spot the drawdown periods. Ask, what was different during the winning streaks? What changed when the curve bent down? Is my edge still valid, or has the market regime shifted? Every month, go deeper. Compare to previous months. Adjust one thing only. Never overhaul everything at once. Fourth, forgive yourself, but don't excuse yourself. After a bad loss or a bad week, speak to yourself like you'd speak to a student you care about. You slipped. It happens. Now what are we doing differently? Not, you idiot, how could you do that again? Self-compassion keeps you in the game. Self-excuse kicks you out. Fifth, turn reflection into action. Every review must end with one concrete change. Write it, implement it next session, track if it helps. Examples from my own scars. After revenge trading streaks, added no trading after a 2R day rule. After oversizing on excitement, forced all position sizes to be calculated before session starts. No mid-trade adjustments. After ignoring time of day filters, blocked platform access outside core hours. These aren't punishments, they're protections. Each one closes a door you kept leaving open for destruction. When you start treating losses this way, something profound happens. The fear of losing fades not because you stop losing, but because losing stops meaning failure. It means feedback. It means growth. It means you're still alive in the game. And the longer you stay alive, the more times your edge gets to compound. You become anti-fragile. What used to break you now strengthens you. With that strength locked in, the final piece falls into place. Commitment. Not the hype kind that lasts a month. The quiet, stubborn, daily kind that lasts a lifetime. Because everything we've covered, mindset, plan, protection, learning, only works if you show up tomorrow and the day after and the year after. That's where we're headed now. The long road home where trading stops being something you do and becomes who you are.